Waiting for other people to join in. Okay, if you are here, you can just mute your mic. Okay, we are waiting for other people to join in. Let's wait for other people to join in. Okay, so let's wait for other people to join before we start. Okay, you can just wait a little bit. Before starting, you should wait for other people to join in. Okay, let's wait for one more person, then we can start. Thank you for joining. If you are here, thank you so much. I really appreciate. Let's wait for other people to join. Okay. Okay, I think we should just start right now since since we are not having people joining. Okay, topic, today's talk show, we're talking about breaking the cycle, how to avoid emotional and impulsive trading, and we need to first understand what does it mean to trade emotionally and what does it mean to have an impulsive trading. I think one of the things we need to understand is that as a forex trader, one of the greatest um, bad thing or one of the greatest downfall that can fall a trader is when a trader begins to trade emotionally. You can't sustain being a good forex trader with the emotional mindset. Like emotion is good, but having this emotion to dictate how you will take a trade is very very bad, and it most time leads to many traders downfall. So in today's talk show, we'll be talking about how to avoid emotional and impulsive trading. Okay, trading in financial markets can be both exciting and challenging. While the potential for profit is enticing, and many traders fall into the trap of emotional and impulsive decisions that determine their success. Breaking this cycle is crucial for achieving consistent and disciplined trading and preserving your capital. One of the things you can work on, or one of the major parts as a trader that we should work on, is working on our emotional and working on how to be able to cave it and hold it. Like how you should not let the emotion to override or dictate how we take the trade. Okay, so before we go deep into the today's lesson or today's talk show, can we just say a little prayer? I know if you're a Muslim or a Christian, you have to believe in God and we pray. Oh Father, take perfect control of this talk show today. Uh, Teach us your way and enlighten our minds that whatever we learn today, it should it should have an impact in our life. In Jesus' name, Amen. Okay. Um, Once again, let me make an introduction how to avoid emotional and impulsive trading. You see, breaking the cycle, we need to first understand what is this cycle. I think that's the first thing we need to understand. What is this cycle? What are we really trying to break? Number one of the cycle is called fear before entering. A lot of traders, it's not like they don't have a strategy. It's not like they don't have the money to trade, but they are just too scared of taking a trade. And one thing that can cause a trader to be scared of taking a trade can only comes when a trader have lose a trade with the same strategy. So whenever they want to take the next trade, they are so scared. So that is one of the cycle we need as a trader. We need to break fear before entering. Hesitation leads to miss opportunity. You miss opportunity because you hesitate, because you are too scared. You are looking for a lot of confidences, you are looking for a lot of edge before you can enter a trade. That is the reason why you lose a trade. So that is one of the circle we need to break as a trader: fear before entry. The second circle we need to break is called FOMO. That's FOMO. It's called fear of missing out. You see, one of the things fear of missing out does is that you enter late. So when you get to the chart, you see that, oh, this thing has played out, but you are like, oh, let me just enter the trade immediately. Let me just enter the trade immediately. You see, they interviewed one of the greatest trader recently, and he was like, I don't open a trade if the trade has begin the movement. What it means is that he said, I don't open the trade if the trade has already begun its movement. He said the reason is because the spread, I don't want to pay for the spread. And that is one of the mentality as a trader we need to have. We have to have this mentality that if you miss a trade, it's fine. Even if you analyze the trade and the trade goes your way and you are not on the chart at that particular time, it's fine. You can still find another trade. Market is here 24/7. Market is here always. Market is here always. You have to have this mentality too. So that fear of missing out sometimes is one of the cycles that usually trigger the emotion. Usually triggered both positive or negative. But in this case, it triggered a negative emotion, fear of losing out. And the third one is impatient. Impatient talks about you close early or overtrade. So you close early or you overtrade. So impatient is that, or you enter a trade, then when you make the trade begin to go your way, then you're like, oh, let me fast and take up the trade because you want to take the profit, and you took the profit. That's impatient, because the moment you took the profit, you will later see that the market goes your way. It goes your way in many folds, and you're like, oh, I should have waited. I should have taken the whole profit, and because you are impatient. And one thing impatient does is that if you take the profit prematurely, there is a tendency and there is high probability that whenever you are in a losing position, you will not take out the losing impatiently. You will want to wait, that you will be hoping the market should retrace. So as a trader, we need to work on our impatience. We need to work on that too. That's one of the circuits we are breaking. And the fourth one is called revenge trading. Revenge trading is whenever you took a loss, you try to win it back. It is called a revenge trade. Took a loss, try to win it back. It's bad. You need to break the cycle too. And overconfidence or doubt. Overconfidence. One of the cycle as a trader, one of the greatest Forex trader ever said, he said something, he said, as a trader, we need to have this mentality of a student. So no matter how we took a profit, no matter how consistent the profit is, we should always have the mentality of a student that I am not enough. Like, it's not like you are trying to pull yourself down. It's like you are studying more. See, one thing overconfidence does is that overconfidence is a good emotional trigger. It's a good emotional trigger, and also is a bad emotion trigger, because when you are too overconfident, sometimes it can lead to losing more trade. So the emotional roller coaster leads to blown accounts and burnout. So one of the things that leads to blown account or burnout, that whenever you feel these emotions, all these emotional roller coasters, they lead to blowing accounts or runs out. So emotional trading often begins with fear or greed. So those are the things. Understanding the cycle. I'm just trying to let us understand the cycle. What are really the cycle? Because this topic before says how to avoid emotional and impulsive trading. So we need to first understand the cycle we want to break first. So whenever we understand the cycle we want to break, then we can know how to move and work towards how to break it. Okay. As I list the whole cycle, I know you all will have been having, okay, this is what I'm going through, this is what I'm going through, and you can just jot it down then, and we look at how you can be able to break this cycle and be a good, consistent Forex trader. You see, one of the ways you can be a good and a consistent Forex trader is when we work on our emotions. It's not really about the strategy, It's not, yes, the strategy is good. You need to have a good and a consistent strategy. But there is more parts at the psychology part too. When we talked about this in the first episode, we talked about the emotion part. There is more part in the psychology part, and as a forex trader, we need to work on that psychology part every time. We need to journal things down, even as we are journaling our trading, our strategy. We need to journal our emotions too. We need to make sure that we are in a calm and a still emotion environment. Like we need to be in this position. So emotional trading often begins with fear or greed. When trader experience loses fear, fear may lead them to rush into trade prematurely. I said this the other time. Whenever a trader have a lose, there is a tendency or there is high probability that the trader is going to lose the next trade. The trader is going to lose the next trade, and this is because emotions have been triggered. This is because emotion has been triggered, and many traders fall into. So when the trader loses a trade, there is a probability that he wants to go into the trade and try to make it back. That is one thing we call about revenge trade. So that is another emotion triggered. And as a trader, we need to be conscious of these things. We need to be intentional with our growth, because the reason why I focus more on the emotion part, because in my journey as a forex trader, I understood that it is not about the strategy. Like, if I were to divide the probability on strategy and psychology, I would say strategy is just 30%. It's not even 20, it's 30, because if you have a good strategy, it's actually a win to you. But the psychology part, you can have a good strategy and still have a losing trade, and still have a losing account, and still blow out your account. You can have two wins in a row. Then the moment you have a lose, your emotion begin to trigger. You want to gain what you lose back. And that particular time, you will begin to lose more and more. So one of the first things as a forex trader is that we need to work on our psychology. We need to work on our emotions. We need to work on ourselves. Do you understand? Okay. Trying to recover the losses quickly. We talked about it. So we talked about this part, and so let's talk about the consequence. Whenever emotion is triggered, what are the consequences? So this cycle results in blowing of account. It results in premature trading. You can never become a pro trader when you have not yet tamed your emotion. You cannot become a pro trader when you do not even understand your own psychology. You cannot be a pro trader when you cannot even rule over your emotion trigger. So we need to work on that particular part too. And it increases losses, yeah, because you are going to have losses, and it gives you a fragile mental state, yeah, because you will not be stable. Imagine you going through this emotion triggered and you are trading. You see, one thing people say is that they say forex is a reflection of who you are. The forex market is going to reflect who you are. See, whenever we have a lose, you see, one of the ways you can know if you are emotionally stable is when you begin to have a lose and nothing changes with your approach to trading. Nothing affects your psychology. I'm talking about a win money. Whenever you begin to lose a win money, in demo accounts, people be like, "Oh, I'm making a lot of money in demo account." Yes, of course, you can make a lot of money in demo account because it's just a demo. There is no emotion connected to demo account because it is not your money. But the moment you begin to trade your own real account, the moment you lose a trade, there is high probability that emotion is going to trigger. So it depends on who you are that the emotion will trigger to. A lot of people can lose a trade and they want to like enter the market and get back what they just lose. So that is another part of emotion triggered, and we talked about it. That's the revenge trading. So let's talk about why emotional and impulsive trading happens. Why? Like, okay, I'm just a normal forex trader. I just enter into the market. I put my money, I enter a trade, then I lose the trade. Then I have emotion triggered. Emotion begin to trigger. I begin to find myself not in a calm state anymore. So we need to talk about why emotional and impulsive trading. So lack of clear trading plan. Yeah, that's one of the things. Lack of clear trading plan. If you don't have a clear trading plan, there's high probability that you are going to be a gambler. And one thing that differentiates a gambler and a forex trader is the ability to understand both their edge and their emotions. They understand both their edge and emotions. So you need to have a clear edge that, okay, this is what I'm doing, because you need to treat forex trading as a business. As a business, so you need to have a clear trading plan first. That's if trader don't have a clear trading plan, there is high probability that all the trade they took is going to trigger the emotion, because if it is their money, I'm not talking about a demo account or a copy this thing. I'm not talking about a paper trade. If it is their money, there is high probability that if you don't have a clear trading plan, you are going to trigger emotion. There is going to be an emotional trigger from your trade, because if you took a trade and the moment the trading is going against you, you will want to like, oh no, no, no. Then the moment the trading goes according to you, you want to take out the trade very fast. You know why you took out the trade very fast? Because you you are too impatient, because you don't even understand why the market should buy or why the market should sell, because you don't have a clear trading plan. So as a forex trader, one of the things we need to do is having our edge, having a clear trading plan. And the second thing that triggered triggered emotional and impulsive trading is no divine risk management. Okay, for example, now you have $100 account and you see a trading opportunity. You just open 0.1 lot size, 0.1 on gold. You open the 0.1. You not even know, you not even have a stop loss and a position that, okay, if this trade go against me, this is the amount I'm going to lose. So you need to have a divine risk management. A divine risk management that, okay, before I took a trade, I must know my risk and I must accept my risk. Okay, this so amount, if the market go against me, I'm going to lose this amount. Let the stop loss do its job. So you need to have a clear risk management. So before you enter a trade, you have a clear risk management and you settle it in your heart that this risk I'm taking, if the market hits my stop loss, it is nothing. Like, I am not connected to that risk. Like, you just need to have this settled mindset about the risk. So you have to have a divine risk management. And the third part of why emotional and impulsive trading happens is poor understanding of market structure. Poor understanding of market structure. You know, when we have the understanding of market structure that, okay, and it's still the same part as a trading plan. If you have a clear trading plan, you can actually have a clear understanding of market structure. You have to have a clear understanding of market structure. What is really happening in the market right now? And so the fifth one is chasing profit instead of following process. And this part is a very crucial part. You know, the forex market is not a place you look for money. Yeah, I always say this. Forex market is not a place you look for money. Forex market is a place you multiply your money. Do you understand? Forex market is not a place you look for money. It's a place you multiply your money. So before you even trade in forex market, you need to have the money, right? You need to at least have money in your hands to trade. So you need to have this mindset that you are not trying to look for a whole lot of money. You are just trying to multiply the ones you have. So that mindset is going to put you, and you need to give yourself a realistic you can't have $100 account and you are trying to aim for $1,000 account. Yeah, a lot of pro trader does it, but that doesn't mean that that is how it look like. Even the pro trader cannot do it multiple times. It just happened, they did it and they did it. So that's it. But as you beginners or amateur, or you are in your Forex journey, you need to have this realistic expectation in the market. Like, okay, this is what I'm looking for, and you need to understand this. The Forex market is not a place you look for money. It's not a place you look for money. You don't use $100 to make $10,000. It's a place you multiply your money. The money with you, you multiply it. Okay. The fifth one says trying to force trade in dead zones. So why emotional and impulsive trading happens. The fifth one is trying to force trade in dead zone. You see, one thing, when a trader begins to force trade, it means that there is an emotion that has been triggered within them. One of the emotions that can be triggered within them at that particular time is is revenge trading. Because whenever you see a trader forcing trade, is that they want to make back what market has collected from them. So, but as we a forex trader, as we want to become a pro trader, and one of the ways we can become a pro trader consistently, that we can be a trader consistent, even in 10 years time, in 5 years time, we can still be in this game, is that we need to have a patience, and we need to be able to understand our emotion. So whenever they got triggered, know what to do. Whenever you, okay, it's fine, we are all human beings, right? We are all humans, right? But we need to know how to cave it, how to understand it, and how to control it. Don't let your emotion triggered in a way that is going to pull out your whole savings, is going to pull out your whole account and blow it out. You are going to regret it. But as a trader that we want to be, one of the things we need to do is to understand ourselves. Psychology is the understanding of one's emotion. It's a study of understanding your emotion. And in the forex market, psychology is a very great topic. That even before you understand your strategy, everything, you need to understand yourself. Yes, you can have a strategy, you can have a good edge, you can have a good strategy, but you still find yourself blowing account. Do you know why you blow account? It's not because you don't have a strategy, it's because your psychology, your emotion level is very low. You let emotion dictate a trading for you. And one thing about the forex market is that any place in the market, you are going to find your strategy. But it depends on which one is good. It depends on your head. Okay, for example, you can have a reversing pattern. If you go on gold 1 hour chart or 15-minute chart, you are going to see many reversing patterns on gold. Many reversing. There are going to be many reversing patterns, but not all the reversing pattern works. So you need to have an edge, and don't let your emotion be a dictator of your trading. A man once said, he said, trading is a game of presence. Trading is a game of presence and patience. You see, whenever it comes to patience, it's a reflection of oneself, because we all have this level of patience. Like, the level of patience I have may not really be the level of patience you have. So, but as a forex trader, you need to learn yourself and understand yourself and grow yourself. When you learn yourself, you understand yourself, you need to grow yourself. You don't accept the fact that, oh, this is who I am. No, that's not a good way to be a good forex trader. If you know that, oh, I'm someone that I have this, I am impatient person. When now it's fine, you are an impatient person. Understand yourself, accept it, then work on it. You need to be a patient person as a forex trader. So these are the 5 things that triggered emotional trading and impulsive trading. So number 1 is that we have already understand what the cycle is all about. The cycle that we want to break. We understand what the cycle is about, and we understand the consequence the consequence of we being in the cycle, because we need to understand the consequence of we being in the cycle. Do you know what differentiates a pro trader to a beginner trader? A lot of things differentiate them actually, but one thing that differentiates a pro trader and a beginner trader is emotional stability. You can see, okay, let me choose like Jeff Benson or which or this Kojo Forex. Yeah, you know Kojo Forex, right? Or Jeff Benson. Let me use Jeff Benson as an example. All these guys, they took a trade and like they risk a lot of amount on that trade. And whenever you see the trade going against them, you can see this calmness. You can see the way they are too calm. You can see the way they critical thinking, like the way they think about the trade. And unfortunately, or the trade goes their way and they make the trade and they have a take profit, or when the trade goes out, hit their stop loss, they remain calm and they go for the next trade. That's one thing that differentiates a pro trader and a beginner. It is called emotional stability. And for you all that are hearing my voice today, I just want to tell you that for you to become a pro trader, you need to work on your emotional stability. Don't let your emotion, don't let your emotion dictate your trading plan. Don't let your emotion dictate your trading plan. Okay, I hope everyone can hear me. The rain is actually falling on my side here, so that's what you can hear in the background. Okay, now in a few minutes, let's talk about how to break the cycle. Now we understand what the cycle is all about. We understand the consequence of being in the cycle, and we understand what triggered the cycle. Now the next topic or the next subtopic is how to break the cycle. How to break the cycle. And one of the ways to break the cycle is develop a robust trading plan. Develop a robust trading plan. Outline clear criteria for entering and existing trades. Stick to your plan to eliminate impulsive decisions based on fleeting emotions. So one of the first ways to break the cycle is develop a robust trading plan. Develop a robust trading plan. So that's one of the ways. That's one of the ways to break the cycle. Develop a robust trading plan. What I mean by a robust trading plan is just like your trading plan. Make it clear. Make it very clear and let it be in steps. Okay, after this, I will do this. And if this happens, I will do this. So you need to develop a robust trading plan and let it be clear your exit and your take profit position. Develop it. That's one of the first ways. And when you develop it, you need to master your plan. Master your plan. Yes, that's very important. Master your plan. No matter what happens, stick with your plan. Master your plan. In our previous talk show, we talked about endless cycle. An endless cycle is a cycle that whenever a trader loses a trade, the trader wants to learn a new strategy. And whenever they learn a new strategy, they lose another trade, they go to learn a new strategy. That cycle is called an endless cycle. It can never end. But for you to become a good forex trader, you must end that cycle. You must not be in an endless cycle. You must not be. Whenever you lose a trade, you need to accept first that losing is normal in the forex market. Accept it in your mind. First, let it be an acceptance contest that losing is normal. I can lose. It's part of it. That's why there is stop loss. You need to first accept it. So whenever you accept it, then the next thing that happens is that you stick to your plan. Even when you have a lose, you go and review what happened to that trade that you lose. That's fine. It is not, don't be in an endless cycle. A cycle that after you lose a trade, you go to learn a new strategy. Then when you trade that one also, you lose a trade, you go to learn a new strategy, you lose a trade again, you go to learn a new strategy, and you find yourself learning a lot of strategy. It's a bad habit as a forex trader. Stop it. Stop it and be in a one trend lane. Do one thing consistently, you will find yourself in a pro trader realm. Yeah, let me just use the word realm. Yeah, you find yourself amidst the pro trader, because the pro trader you celebrate today, you can see that he only stick to one strategy and he become master of that one strategy, and that is why you called him a pro trader, and that is why you want to learn under him. So first thing you need to do is have a robust trading plan and master your plan. Master it. Be a master of your plan. If you have a strategy, learn it to the deep. Yes, learn your strategy to the deep, understand it, and be a master of yourself. So the second thing of how to break the cycle is use risk management. Use risk management as emotional control. It's very, very important. Use risk management. There is nothing 100% sure in the market. That is why there is stop loss and take profit. Use risk management. Before you enter a trade, have it in the back of your mind. I want to enter this trade and I can lose this trade. So have the amount you want to lose first. Let it be ready. Okay, this amount is my stop loss position. This is what I'm losing. Yes, settle yourself with the losing part, that I can lose. You know, the moment you want, to trade without losing, it's called an ego. And one thing about it is that whenever a trader have an ego, forex market is going to what? Is going to discipline that trader, because you find yourself making wrong decision because you feel like, oh, I can't lose. No, you can't lose. That is what business is all about. There's losses in business, there's profit in business, but in all, you still stick to strategy. So the second part, or the second ways you can break the cycle, is use risk management as emotional control. Sorry. So the third part is know when not to trade. You can't be showing up every day. Yes, you have to show up every day, but you can't be trading every day. Because you look at the chart does not mean you should enter a trade. You can just stay in the chart, study, analyze the charts. Then if you see your trading plan, it's fine, trade it. But you need to understand that it is not every time trading market is actually conducive for your trading plan. It is not every time the trading market is a good place for your trading plan. There are times that the trading market can be so consolidating. Okay, let's say for example, you have a breakout as your strategy, and when you open the chart, you see that market is consolidating. You see, consolidation and breakout is an opposite word, because you can't be trading in a consolidating pattern. So at that particular time, you know that, oh, I can't take a trade here. Then you close the chart or you study the chart. So you need to know when not to trade. And whenever you know that, okay, my trading plan cannot work for this market condition, my trading plan cannot work for consolidating market. So when you open the chart and you found out that the market is consolidating, what you should do is close the chart and call it a day. Know when not to trade. You need to know when not to trade. You can't be trading every day. It's not possible. You need to know when not to trade. And the fourth part is journal every trade. So journaling every trade, not just the results, but your emotion. So you need to journal both the result and the emotion. Okay, track how you felt before and after, and this builds awareness and growth. Sorry. So for the previous point, I said know when not to trade. Do you know that discipline is a position trade? Discipline is a position too. Like, okay, you have a strategy that does not work in a consolidating market, and when you open your chart, you found out that the market is consolidating. You have two options. Is either you follow your plan, or you force the trade. And when you force the trade, you are going to regret it, because it is you are trading outside of your plan. But when you follow your plan, you are being disciplined. It is not that you cannot open a position. It is just that you want to follow your plan. For you to be a consistent forex trader for a long run, you need to be disciplined. Discipline is an underrated word we use in the forex market. A lot of people don't know that in the forex market, you need to be disciplined. There are rules and conditions. You need to be disciplined to follow them in all time, no matter what happens in the market. Okay, so the fourth ways to break the cycle is called journaling your trade. Journaling every trade. Journal every trade, both your emotions and your results. Okay, the fifth part, and this one is the most important one. It's very, the most important one is detach from outcome. Detach yourself from outcomes. No matter what happens in the trade, if you see a trade and you enter the trade, no matter what happens in the trade, it should not be a conclusion to talk about yourself. Okay, for example, when you lose a trade, you shouldn't call yourself a loser. Do you understand? When you lose a trade, don't call yourself a loser. Don't put the outcome of that trade in yourself. So winning does not mean you did everything right. Losing does not mean you did everything wrong. Focus on process and not result. Winning the trade does not mean you did everything right. And losing the trade does not mean you did everything wrong. Just focus on the process. Just focus on the process. Focus on process and not the result. You see some traders, the way they put themselves down is whenever they lose a trade, they were like, oh, I'm a bad trader, or they speak negative words to themselves. They call themselves words, they call themselves name, they call themselves, oh, I'm a loser. All these attributes is very, very bad. It affects your emotions. It affects, you know, in the last episode, we talked about something called the the what's it called? The unconscious mindset. The unconscious mindset, the way you program yourself. So as a forex trader, we need to have this attribute that no matter what we go through, no matter what the result is, it does not determine who I am. It does not mean that because I have a bad day, it does not mean I'm a bad trader. So that is what I'm talking about. Focus on the process, not the result. When you have a winning trade, focus on the process, not the result. Don't detach the result. Detach yourself from the outcome. Detach the result from who you are. You are not your result. You are not the result of that trade. Imagine because you took a trade and you lose a trade, you begin to put the losses on who you are. You need to understand that you are a good forex trader. You lose one trade out of thousands of trades you are going to take in the future, and you are putting yourself down. It is just one trade out of thousands of trades. Do you think you are going to quit forex trading now? There are still years. Give yourself 5 years to develop. Give yourself 2 years to develop yourself. The losses you have today is just one out of 10,000 trades you are going to take. So you need to be emotional conscious about this thing. It is the result is not who you are. the result is not who you are. So let's talk about the he said, and again, you need to set a realistic expectation. A realistic expectation like, oh, this is the amount I want to make. So no, with that, you will not put yourself in this emotional triggered to try to meet up with your expectation. So accept the losses are part of trading. Focus on consistent growth rather than quick win to reduce greed and driven impulse. So focus on growth. So we need to focus on growth. And this one, let's talk. Say build emotional resilience. Build emotional resilience. So one of the ways to build emotional resilience is to practice mindfulness. So you need to practice mindfulness whenever you are in trading. Don't forget, forex trading is a game of presence and patience. Presence and patience. So presence means that you need to be mindful if you are in the forex market. Be mindful of it. Don't just trade for fun. You are not a gambler, you are a forex trader, you are a businessman. So you need to know that emotion are part of trading, but emotional trading is a choice. Emotions are part of trading. We are humans. We are all humans, and it is very right if sometimes in our trading journey we felt emotions, we felt it. So is it is not a bad thing, but emotional trading is a choice. Before you took the trade, ask yourself, am I following my plan, or am I just being triggered, or am I just trying to um just following these emotions within me? So ask yourself that question. So to grow, you must unlearn the habit of impatience, revenge, and fear. So to grow, you must unlearn the habit of impatience, revenge, and fear, and replace them with patience, precision, and peace of mind. So so let me just give you the motivation behind it. It says you do not need more setup, you need more self-control. Break the cycle and you unlock the trader you are meant to be. You do not need more setup, you need more self-control. Control yourself, break the cycle, and you unlock the trader you are meant to be. Let me know if you want. Okay, so break the cycle and you unlock the trader you are meant to be. So the question and answer time. Sorry. Okay, if you have a question, you can just um, click on the raise up hand button. If you have a question, click on the raise up hand button, then I will allow you to speak. Question? Anybody with questions? Anybody with questions? If you have a question, just raise up your hand. Click on the raise up hand button, then I will allow you to speak. Okay. Uh, in the absence of no question, or let us wait a little bit. Um, if you have questions, you can just raise up your hand and I will allow you to speak. Anybody with questions? Okay. In the absence of no question, um, today's topic is breaking the cycle, how to avoid emotional and impulsive trading. We talks about what are the cycle. We talks about what is the consequence of this cycle. We talks about what triggered this cycle, and we talks about to how to break the cycle. So I know that with these conversations where we have, with these lessons, you'll be able to go into your training chart in the coming weeks and you are going to perform well and wonderfully. So if you have any question, you can just click on the raise up hand button. Then I will allow you to ask your question. Or if you have something to say, okay. So how many times will you let emotions sit in the driver's seat of your trade? How long will fear and greed rob you of your consistency? Have you not seen it yet? You have been a trader for so long, or maybe 1 year or some few months, and you're like, oh, I'm not breaking this thing yet. It is because you are giving emotion the place of your trade. You are trading based on your emotion. You did not lose because you did not know. You lose because you react instead of respond. You panic instead of plan. It is time to break the cycle. No more revenge trade, no more chasing losses, no more emotional exit. You are not your last loss. No, we talked about this in detach yourself from the result. You are not your last lose. You are not your last lose. You are your next decision. Master your emotions and you master the market. If you master the emotion, you will master the market. This is not just about charts. This is not just about the chart. It is about discipline, patience, and self-control. The forex market is not just about charts. It is about discipline, patience, and self-control. True growth starts when you stop trading for excitement and start trading with intention. True growth in the forex market starts when you stop trading for excitement. Stop trading for excitement and start trading with intention. It is time to level up. It is time to level up. It is time to level up. So that is the end of today's talk show. I hope you learned 1 or 2 things. And if you have any question, you can just click on the raise up hand button. You can use 5 minutes or 10 minutes to talk about your question. Okay. So in the absence of no question, I would like to just tell you, breaking free from emotional and impulsive trading is vital for long-term success. So if you break free from these emotions and impulsive trading, is what is required for a long-time consistent trading. It involves cultivating discipline, employing strategy, and managing emotions. So remember, consistencies and self-control are your best friends on the path of becoming a successful trader. Remember, consistency and self-control are your best friends on the path of becoming a successful trader. So thank you so much for joining. I really love you guys. Thank you so much. Have a wonderful day and see you all next week. It's going to be a great week for us. We take more trade. So just the closing prayer. Thank you, Jesus, for today's program. We bless your name. May your name be highly exalted in Jesus' name. Amen. Thank you so much.